Welcome to the Quality Analysis page on Stockoscope, the first dimension of the 5D framework. In this walkthrough, we'll show you what each section of the page means and how to read the 10 pillar scores. Let's get started. We're using Apple as our example, but everything you learn here applies to any stock on the platform. At the top of the page, you'll find the Business Quality Scorecard. This composite rating summarizes performance across all 10 pillars on a scale of 1 to 5. A score above 4 typically indicates strong fundamentals, while anything below 3 may signal areas that need attention. Next to the overall score, you can see how each individual pillar contributes to the rating. Pillar 1 is top line and profit growth. The bar charts on the left track revenue, EBITDA, EBIT and net income over time, and you can toggle between the four using the chips at the top. The metric cards on the right show each one's compound annual growth rate at a glance. Consistent growth across all four signals strong demand and efficient cost management. Hover over any card for a full explainer about the metric. Pillar 2 covers per share fundamentals. This normalizes total figures by share count, revealing whether growth is being diluted by share issuance. We track revenue per share, net income per share, book value per share, and tangible book value per share. Rising per share metrics confirm that shareholders are capturing real value growth. Pillar 3 examines margin efficiency. Here we look at gross margin, EBITDA margin, operating margin, and net margin. Expanding margins over time indicate pricing power, cost discipline, and operational leverage. The chart shows the trend, and the metric cards highlight key values at a glance. Pillar 4 is operational efficiency. This section evaluates how effectively a company uses its assets. We measure asset turnover, days sales outstanding, days inventory outstanding, and the cash conversion cycle. Lower cycle days and higher turnover suggest efficient operations and strong working capital management. Pillar 5 is the returns overview. This is one of the most important pillars. We look at return on assets, return on invested capital, return on capital employed, and return on equity. High returns indicate that management is efficiently deploying capital to generate profits. Pillar 6 assesses cash flow quality. Cash is king, and this section tracks operating cash flow, free cash flow yield, and income quality. Income quality is the ratio of operating cash flow to net income. A value above 1 means earnings are well supported by actual cash generation, not just accounting profits. Pillar 7 covers liquidity and working capital. We measure the cash ratio, quick ratio, current ratio, and working capital turnover. These ratios indicate whether the company can meet its short-term obligations. Healthy liquidity ensures financial flexibility and resilience during downturns. Pillar 8 evaluates leverage and coverage. Debt can be a useful tool, but excessive leverage is risky. We track debt to capital, debt to equity, net debt to EBITDA, and interest coverage. Low leverage ratios and high interest coverage suggest a strong balance sheet with manageable debt levels. Pillar 9 looks at valuation multiples. Here we show the price-to-earnings ratio, price-to-book ratio, enterprise value to EBITDA, and enterprise value to sales. These multiples are compared against historical trends to understand how the market is currently pricing the stock relative to its own history. The final pillar is dividend and shareholder yield. This covers dividend yield, dividend per share growth, payout ratio, and the coverage ratio. A sustainable dividend requires a balanced payout ratio and coverage above 1.5 times. Consistent dividend growth reflects management's confidence in future cash flows. That covers everything on the business quality page. This is just one of 5 dimensions in the 5D framework. Head over to the Peers, Valuation, Analysts, or Holdings tabs to continue your analysis. Thanks for watching.